Hi there, folks. Welcome to the Chaikin Minute. I'm David Shulin. Today, we are going to discuss one of the preset screens in the Chaikin Analytics screener. We've covered a screen or two on previous videos discussing where the logic for the screening criteria comes from and how you can use it. And we'll do the same thing today. Today, we're going to talk about the classic bear screen. The classic bear screen. We've talked about the classic bull already, and the classic bear is really logically the opposite, right? When we come to our screener, oh, that is the wrong drawing tool. Here in our screener, we can choose from our preset screening criteria, which can be found under this folder. Remember, you can pick and choose screening criteria, of course, yourself. You don't need to use our preset screens. We're just trying to make it a little easier for you. A great starting point is something you can use right out of the box. But if you are going to choose the individual criteria yourself, remember, do not pick each and every one of these criteria. If you did, you would be narrowing the universe of stocks down far too much. You would end up with 0 results. Let's jump into our preset screens and let's talk about the classic bear large cap today, the opposite of the classic bull large cap that we talked about previously. For a classic bull large cap, we're going to start with a starting universe of the S&P 500 for large cap stocks. That obviously makes sense, the largest 500 stocks. We are looking for bears this time, right? So you can see, instead of the typical default logic of bullish and very bullish rated stocks, we're doing the opposite. We're looking for bearish and very bearish stocks. Stocks that are bearish or very bearish are likely to underperform the market in the months ahead, in the next 1 to 6 months. Underperform the market, right? Okay. We scroll down now to technicals. Yes, most stocks that are bearish are below the long-term trend line. Not all, most. You could be technically above a falling long-term trend line and still be bearish. But if we are looking for bearish stocks, if we are looking for a stock we are considering shorting, or a stock we might like to buy a put on, or some other bearish options strategy, we would want those in clear downtrends. So choosing a stock that is below a falling long-term trend line would be a great way to do that, right? If you're below a falling long-term trend line, you are in, by definition, a downtrend. We then look at our money flow and relative strength versus the SPY factors. Of course, we're going to look at these. The classic bull and the classic bear are looking for long-term outperformers, or in this case, underperformers, those which have clearly been underperforming for the long haul. So we are looking at persistency of 6 months, not what the money flow is today, but that the money flow has been by and large bearish, by and large red over the last 6 months. The same thing for relative strength. Relative strength is about outperformance and underperformance, right? It's showing us what the power gauge rating is looking to capture moving forward. It's showing us the past of this. Relative strength versus the SPY in either direction tends to persist. Outperformers tend to continue to outperform. Underperformers tend to continue to underperform. Those prevailing trends continue for the most part. Of course, not forever. But tomorrow, an underperforming stock, a stock that's underperforming today, tomorrow is most likely going to continue to be underperforming. Large institutions look for outperformers to buy and underperformers to short if they do that sort of thing, depending on the specific institution, right? So we're looking for 6-month low persistency of relative strength as well. Now we have a minimum price of $10 in here. Of course, you don't have to choose that. But if we were going to look for an option strategy on one of these individual stocks, you know, it probably makes sense to be looking for something over $10. Anything below that and your strike prices start to get pretty wide on a percentage basis, it probably isn't going to work as well. So we do $10. But again, These preset screens are designed for you to be able to modify as you see fit, as market conditions change, or as you're just looking for something specific. Not everyone has exactly the same trading style, and that's okay. That's okay. So we're going to click Get Results. That's all we have to do. We only get three results in total right now. And that makes some pretty logical sense. If we think, and I don't know when you're going to be watching this video, the current market conditions involve the very largest stocks being our outperformers for these last handful of months. We've seen interest rates fall, and we've seen the largest of large tech companies really begin to outperform for the last 2.5, 3 months or so. So it makes sense that there are not a lot of large cap underperformers for long periods of time, right? In the 3 months prior, we're looking back 6 months at a lot of these things. In the 3 months prior, we had a lot of value stocks outperform, a lot of cyclical sectors, et cetera. It's kind of flip-flopped with interest rates falling. So that makes sense. There's very few stocks that are large that have been clear underperformers here for a long time. Different market conditions will return different amounts of results here, right? And if we wanted to click View in Workspace, we could bring these stocks over and take a closer look and do our work on the checklist. The checklist is by and large looking for bullish entries, but it can still help us to understand the current situation a little bit and look for clear underperformers. And these are all clear underperformers for the long term, right? For the long term, that's what we screen for. Now, you might be saying, maybe given the current market conditions, large caps aren't right for me. Okay. Classic bear small mid cap is exactly the same, folks, except for the starting universe looks at the Russell 3, the whole Russell 3, right? The Russell 3000, which is sort of a proxy for the whole stock market, and choosing market cap of small and mid cap here. Now, it is likely that we are going to get more results by choosing this, not only because we're looking at more stocks, but also because of the outperformance of large caps recently, as opposed to small caps, which have significantly underperformed as of this recording for a number of months. And we get 46. Now, if you're just looking to short something, maybe that works. If you're looking for an options trade, maybe small caps might be a little difficult. Maybe there's not a lot of liquidity there. I don't know. You could choose mid cap only. We could add some extra items. We could also specifically look for overbought stocks. If we were going to short something or do a options bearish strategy, we would be looking for a stock that is likely at or near a short-term high, which would be overbought. There we go. We narrowed it down to 23. Maybe we said, maybe we just want to look at mid-cap stocks. Now down to 7. So maybe we've narrowed this down to a more usable group that we could then go back into the workspace, look a little closer at these individual stocks, maybe use our friend options play to determine if there are any good bearish options trades. We hope you've enjoyed today's Chaikin Minute discussing preset screens, our classic bear screens. We'll be back with you on Monday. Have a great weekend.